Aaron, thank you. 5:45, Wake Up Money Time. With the economy well into a recession, investors are more skeptical than ever. As we begin this new year, what sort of investments should we be making, if any? Biz Radio's Kaleta joining us on this new year with some answers. Some answers. Al, good morning to you. We were joking, buying stock in coffee cans and mattresses, perhaps. A little joking there.
Yeah.
Is there an investment to be found that's an appropriate one in this climate?
They're very selective. Do not buy bushel baskets of stocks. In other words, mutual funds ought to be very, very carefully looked at. And it's because they buy several of very good companies, and then there is a whole bunch of companies you have no clue why they bought them or if they're going to perform. So if you're going to be in the market, be in the market with stocks and stocks only. But then for our investors, for the person out here on the street, bonds, I think, are the best way for them to save their money. They're going to get a lower return, on the upside. Bonds do not appreciate like stocks, but they sure pay steady. And you can get an interest rate, and a very good interest rate of 8, 9, 10%. And these corporate bonds that are coming out right now, if you can detect the quality of the company, you can buy a good bond at a very deep discount. So let's just say you buy a bond for 85 cents on the dollar, $850 for a $1,000 bond. You just made 15% because that bond will redeem at $1,000. The thing that you want to watch is the call to maturity. How long will it last? 2 years, 3 years, 4 years?
How long do you have to park it?
How long do you have to park
and how
your
long
money?
can you be without that money? So so that's certainly something to take into consideration. You have said in the past, and you've kind of opined on where you think the bottom might be. Is there still some volatility that we should probably expect here in this market, you think?
It was so funny yesterday. I was watching my favorite, CNBC, as we all do.
Well, I won't hold that against you, even though Fox has a business channel. But go ahead.
And I was watching Fox also. And this is my comparison.
Okay.
I'm watching one, and so on one side, on the other channel, they had the pessimism of the market, which I don't know why they do this, and they talk about how doomsday is befalling us, some of the economists. On the Fox side, it was optimism, and under every cloud, there's a sun above it, and we just have to wait for the sun to shine. And so when I looked at the different economists talking in different areas, I think I tend to believe in optimism that we are reaching a breakout period. But please, at this time, this is not a time to be wildly investing or going into your 401k and loading up on a lot of mutual funds that you have no clue of what's going to happen over the next 6 to 9 months.
Well, while there are some real problems out there, we also have to remember that there is some self-fulfilling elements to this. The more you say it's bad, the bad will continue. So,
and the Fox, if you listen to Neil Cavuto and you listen to the economists that I'm telling you, he is right on target with the people that he's bringing on. It's a good place for our listeners to get some very, very good fundamentals.
Approach with caution. Kaleta, as always. Thank you very much. Appreciate it.